In 1989, RJR Nabisco was acquired by a private equity firm for 30 billion US dollar. In 1989, 75% of the world countries where their GDP was less than 30 billion dollar. From this is known how big was the deal. The private equity firm which acquired RJR Nabisco, it is known as father of modern leverage buyout. That's called KKR. KKR, Kohlberg Kravis Robots, was founded in 1976 in New York City. The founders are Jerome Kohlberg Jr., Henry Kravis, and George R. Roberts. The three founders, they are bankers at investment bank called Bear Stearns, and they were fed up with how investment banks are operates. They just advise the deal and take the commission. But according to them, if they have expertise, why don't they acquire the company and grow them and sell for the profit? That was the thought process behind the KKR. And for buying, they borrowed money, and that was the beginning of modern leveraged buyout. In the early days itself, KKR got attention of Wall Street because of their aggressive takeover deals and high risk, high return buyouts, strong returns by following controversial methods like layoffs and restructuring. Then come in 1989, their biggest acquisition of RJR Nabisco for 30 billion US dollar in 1989. And this was a subject of a book called The Barbarians at the Gate. Within just 20 years, they have changed their strategy from small buyout to large buyout. And by 2000, they are become a diversified private equity where they started investing into infrastructure, real estate, and credit market. In 2010, they went public through IPO in US, and by 2020, they became diversified asset manager. And right now, they are managing nearly 700 billion US dollar. That is their asset under management. Now let's look at who all are the investors in KKR. That's include Abu Dhabi Investment Authority, Kuwait Investment Authority, Qatar Investment Authority, Government of Singapore Investment Corporation, insurance companies like MetLife Prudentials, pension funds like California Pension Fund, Canadian Pension Fund, and multiple European pension funds. And also institutions like Stanford Endowment Fund, Yale Endowment Funds, all were their investors. KKR right now holding shares of more than 400 portfolio companies. That's include GoDaddy, Duracell, TXU, First Data, Lyft, and Geo platforms, in which Duracell was one of their very successful portfolio. They have acquired Duracell for 350 million US dollar, and they exited with 3.8 billion US dollar, almost 3.5 billion US dollar in profit in a single deal. KKR was acquired Global Atlantic, a leading insurance company, for nearly 5.6 billion US dollar. That was a strategic move. They have a lot of insurance premium. It was nearly 230 billion US dollar asset under management for Global Atlantic. KKR used these funds for more acquisition and make more profit. KKR made a standard. It's called buy it, strip it, and flip it in 3 years. That was controversial but well known in the Wall Street. When KKR acquire any company, they make sure every stakeholder become a shareholder because they believed in skyrocket productivity and they believe every shareholder will contribute their best for the company's growth. If you are an established business and looking for an exit, or a startup founder who is looking to raise more than $100 million, KKR is a good option. But usually they used to invest or acquire companies based on their referrals. But we are giving their contact details for reference. Share with somebody who may need it. Thank you.